Welcome to our video on the important topic of estate tax versus inheritance tax. Understanding the differences between these two types of taxes is vital when dealing with inheritances. Let's dive in to explore how each one functions. In this video, we'll cover three key areas. First, understanding the distinction between estate and inheritance taxes. Second, the role of trusts and probates in estate planning. And finally, we'll discuss the importance of seeking legal advice when dealing with these matters. We're going to begin by examining the key differences between estate and inheritance taxes. It is crucial to understand who is responsible for these taxes and the conditions under which they are levied. Estate tax is levied on the entire estate's value before distribution, meaning it affects the overall assets left behind by the deceased. This tax is typically only charged on estates exceeding a high monetary threshold. On the other hand, inheritance tax is paid by the beneficiary. It's worth noting that not all states impose an inheritance tax. For example, Kansas does not have this tax. Therefore, understanding these differences helps determine potential tax liabilities during estate planning. Let's test your knowledge. Which tax is applicable to the entire estate's value before distribution? Here are your options. A. Estate tax. B. Inheritance tax. You may pause the video now to consider your answer. We will reveal the correct answer in the next section. If you answered estate tax, you are correct. Estate tax is indeed levied on the total value of a deceased person's estate before distribution to heirs. One of the major advantages of including a trust in your estate planning is that it allows assets to bypass the probate process. Probate is a legal procedure that can be time-consuming and expensive. By utilizing a trust, you may avoid or minimize estate tax complications. It's important to consult the trust document to understand asset distribution. Next, let's look at the necessary legal steps. First, review the trust document to understand how assets are being distributed. It's essential to consult a legal advisor who can provide customized guidance tailored to your unique situation. And importantly, be aware of the local laws related to both estate and inheritance tax, as these can vary. Let's wrap up by summarizing key points. Estate taxes impact the total value of a deceased person's assets. Inheritance tax, however, is shouldered by heirs. Trusts can bypass probate, resulting in smoother transitions and potentially lesser estate tax issues. Lastly, be mindful of state-specific laws, like Kansas, that can affect tax requirements. Thank you for watching our video. We hope you found the information on estate and inheritance taxes insightful. Be sure to like, share, and subscribe. Let us know your thoughts in the comments below.